And now for an exclusive interview with the CEO of Mr.Diy Thailand. Everyone, please join me to welcome Mr. Andy to our KS Forward Show. Hi, Andy.
Sawadee-krap. Good morning, everyone.
Okay, hi, Andy. It's good to have you, and also thanks for your coming today. พี่ทิพย์เชิญครับ
Thank you. Yeah, pleasure to be here today, and thank you for the opportunity for Mr.Diy.
Okay, thank you, Mr. Andy. And today's session will be conducted in English and in Q&A format. So let me start with the first question. Mr. Andy, could you please share us how Mr.Diy Thailand performed in 2025, and as the company reached 10 years milestone in Thailand, how would you reflect the key achievement, growth journey over the past decade?
Yeah, sure. Thanks for the question. So, 2025 has been a significant year for Mr.Diy for many different achievements our company has accomplished. First of all, we have successfully added 200 new stores with meeting our new stores opening target. With that, we have a total store of 1127 by end of 2025. We have also managed to serve over 120 million customers in a year, which is almost double of the population of Thailand. If you think about that, 120 million means every month there are 10 million customers are walking across, or visiting Mr.Diy store. From a financial aspect, we deliver great result. Our revenue has grown 24% to 20 billion Thai baht for 2025. At the same time, our net profit has grown 48% to 2.6 billion for 2025. I think basically, from a quick snapshot that reflect operationally and financially what our company has delivered last year.
Okay, thank you, Mr. Andy. But like, as the company reached 10 years milestone in Thailand already, right? So, how would you reflect the achievement and growth journey over the past decade? And actually, could you also walk us through how the store network has evolved over the time?
Yeah, sure. I think I'll walk you through our milestone in Thailand. We've opened our first store in Thailand in year 2016. So this year we are celebrating our 10 years anniversary in Thailand. In fact, Thailand is the first country Mr.Diy expanded overseas. So the brand came from Malaysia with a goal to offer affordable home improvement product to the general mass market. So in Malaysia, at the early stage, Mr.Diy is operating in mall format only. And one of our key partner back then was Tesco, which is Tesco Lotus right now, Tesco Malaysia. So, we have almost a store in all of the Tesco location in Malaysia. And Tesco then noticed that our model basically complement them well. In the Hardline series, they invited us to go to UK. As a Malaysian company, we were thinking, okay, UK is probably too far from us. We then, declined that offer, and Tesco management came back, say, hey, why not consider Thailand, because we have quite a huge operation over there. So then that's how Mr.Diy started in Thailand, and basically the rest are history. So again, 2026 basically marked our 10 years in Thailand. If you look at our milestone, basically just split by two timing. The first half of our journey, we added 250 stores. So that is where we does a lot of trial and error on our business model, and also fine-tuning our business model for the Thai consumer. We started to ramp up in the second half and successfully added over 850 stores later. So you see, first half and second half, the number has grown significantly. First half, 5 years, 250 stores. Second half, in fact, the second half wasn't finished, but what we recorded now, there's another 850 stores being added during this period. And it is also important to note that the COVID-19 pandemic does not slow us down. In fact, we continue to scale during that period, and over 500 of our stores, or close to 50% back then, was added during the pandemic period between year 2020 and year 2023. And this is also where we launched our standalone format, where our standalone format today is so important. It contributed over 70% of our total revenue. And lastly, 2025 was also a milestone for the company, as our company was listed on the Stock Exchange of Thailand after operating 9 years in this market. Our IPO marks the largest IPO of the year, with a market cap of 56 billion Thai baht during listing. And this basically reflects the confidence from all our stakeholders, including our customers, our business partner, and also our investor, who believe in the growth and the long-term growth prospect of Mr.Diy in Thailand.
Interesting. Okay, how you think about the long-term expansion opportunities, including your view on the store capacity in Thailand, Mr. Andy?
Yeah, before I move into that question, maybe I give a bit of color on where is our store network. Basically, the map we are seeing here shows the distribution of Mr.Diy stores across Thailand. As you can see, majority of our stores are located in the central and northeastern region, where most of the population live. That is important because Mr.Diy serve the mass market. And the rest of our store then spread across other regions of Thailand. Our store network has also covered all 77 provinces in Thailand. And last year, we expanded to the last 2 provinces, which is Mae Hong Son and Phang Nga, finally completing our nationwide coverage. And this milestone took us almost 10 years to achieve. And broadly speaking, our stores can split into 2 formats. Mall format, which form 1/3 of our store, and standalone format, which form 2/3 of our store. We have up to 829 standalone format as of December last year. What is the differences of both of these formats? Basically, the mall format will give us brand presence and visibility, while the standalone format will give us reach and also accessibility. And together, they make Mr.Diy one of the most accessible retailers, and the accessibility will basically power our growth, in the coming time in Thailand. So then, to answer your question about what is our view on the maximum store capacity, I think we see the home improvement market in Thailand is still underpenetrated. Again, we serve the mass market. We serve the middle and lower income customer, which form 85 to 90% of the total country population. That's why one of the most important metrics for our business is about the population. So if we take last year, for example, with over 1,000 stores divided by Thailand population, that makes our population per store ratio, we call Mr.Diy population per store ratio, at 62,000. So basically, every year, we'll be using, or we'll be running this analysis by different region or provinces to determine where is our next location be. If we set 62,000 as the median, any location that will be belowing that median, any location that is below that median, that means we have sufficient store. Any location that is above means from a population data, it suggests we can have more store over there. So we will then send our business development team to do site recce and also propose a location to open. And these processes repeat in a yearly basis. Now, whether 62,000 or what is the right number for Mr.Diy in Thailand, I think that, because we are the market leader in our segment, it is quite hard to benchmark. But we can look at a more mature country, which is DIY Malaysia. DIY Malaysia has been operating for over 21 years. DIY Malaysia is operating 1,600 stores in Malaysia. They are still adding more than 100 stores every year at this stage. So the population per store ratio for Malaysia is approximately 22,000. So 22,000 today versus 62,000 we have in Thailand. Clearly, it signals there are much more room for us to grow in this market purely based on a population per store ratio data. So from this data, we can see that or we can know that the home improvement market in Thailand is still under-penetrated, and that offers Mr.Diy Thailand significant growth opportunity. So our plan is simple: to expand our store network, and with a target to add 210 stores this year and next year, and aim to reach 1,500 stores by year 2027. And through the IPO from the fund we raised, we have also acquired a piece of land to build our automation warehouses that will be ready by 2031. And when that whole facilities is ready, the entire plot of land is at 160, right, or equivalent to 250,000 square meter, or it's almost a size of 35 football field. So it's a gigantic facility. So when that facility is ready, by year 2031, the construction will take time. We expect that will give us a capacity to support up to 3,000 stores in Thailand. Yeah. So I think that is basically some of our thoughts on the potential store we could have. So short term, we were thinking, in 2 years we will be exceeding 1,005 stores milestone, and then we will be at the pace of adding 200 stores every year. And then by 2031 we will have a capacity, a distribution center that have the potential to support up to 3,000 stores. Now, the store format that we are going to open for our new store, around 90% will be a standalone format. That format is important because, as I mentioned, Mr.Diy is the only home improvement retailer that have coverage in all 77 provinces in Thailand, and that basically this is enabled by our standalone model. So the standalone model will allow us to penetrate deeper into rural and underserved area where we see the demand for modern retail is growing. And our standalone format in Thailand is a build-to-suit model, with each store are constructed based on our specific requirement. And we secure this location through long-term leases. Some of the leases can go up to 21 years. So as this site, they are custom built for us, making them less likely to be replaced by others retailer, and the rental terms are also consistent as we sign long-term leases. We believe the next 5 to 8 years will still be a golden window for Mr.Diy to secure a prime retail location, predominantly prime retail standalone location in Thailand, that could position us strongly for our future growth.
Okay, thank you, Mr. Andy. It sounds like the Thailand still be a good market and to Mr.Diy. But as the network continue to expand, are you starting to see any sign of cannibalization, particularly in more urban areas this time?
Yeah, I think there's a good question. There's also one of the question many people is asking. See, we are at the pace of growing at a 20% year on year, and at the same time, our SSG has been positive all the time. There's only 1 year we had a negative SSG, which is 2020 during COVID. But the 9 years we are operating here, our SSG is basically positive. That show a sign of high growth plus, I think, and also organic growth from the existing store. Yeah. So speaking on cannibalism, I think that could explain also with the population per store ratio I explained earlier. With today, each DIY store is basically serving 62,000 customers. I think we are still far from seeing that number. And if you look at a more mature market, population per DIY store ratio is at 22,000, and the market is still adding much more new stores. So I think we are still at a very early stage. And to give you maybe a good benchmark, the convenience retailer in this market, the population per store ratio is is approximately 5,000. So one shop is serving around 5,000 employees. Yeah.
Thank you. Thank you very much, Mr. Andy. That gives us much clearer picture for the business and your store network. Let me move to your product strategy. What product categories are currently performing the strongest one?
Of course. So for Mr.Diy, household and hardware are our best-selling category. Together, they contributed over 50% of our total revenue, followed by stationery, electrical toys, which is our core category. Our products appeals to everyone, basically from baby to senior citizen. And over 70% of our customers are female, which align closely with the strong performance of our household category. Our store appeal to people across all income levels. Majority coming from the middle and lower income customer, which form 85 to 90% of the country population. Yeah. So I think basically, it's an everyday store for everyone. That is one of our mission and vision. Mr.Diy, the everyday store for everyone, for everything. We even launched a branding campaign many years ago in Thai, translated into Shop Dai Tok Wan, Kop Pur Tok Kun. Means you could get everything for every day from Mr.Diy. I could give you some example of, as a consumer, as a family consumer. So I've been growing up with Mr.Diy. The brand has been in my country for more than 21 years. So when I'm at my younger stage, still a bachelor, in my university stage, I will visit Mr.Diy to get stationery products. My girlfriend, which is my wife right now, would then, visit Mr.Diy to get, she liked doing craft or DIY stuff, so they could get that from our store. And then when we start moving into our first house, small condominium, we will get all the cleaning utensils, cooking utensils, home improvement required things from Mr.Diy. And, when we start to form a family, I have 2 kids with me. My son would always enjoy browsing our toys category and also the sports department. My daughter, will look at some of the Disney licenses product, such as jewelry and also, stationery for her for drawing and etc. So basically from this example, you could see who are our customers, what kind of offering or value proposition that we offer. It's a family store. It's a store that you can get everything for your house. And then, although the paying customers will be female, predominantly housewife and working mom at the age of 35 to 55 years old, because these are the group that is holding the household expenditure. So I think basically from what's have sold well in our store plus some description of our customer audience, it managed to give everyone a bit color who are the main people that we are serving. Mass market, predominantly female, and basically you can get everything you need for your home.
Thank you. It sounds like your product is for everyone. And how is your private label strategy evolving going forward, if you can share?
Of course. So in last year, our private labels contributed around 45% of our total revenue. It has been very consistent since the last 3 years, from 43% in 2023 to 45% respectively in 24 and 25. So our private label portfolio is built on the several brands strategy, serving the needs of different customers. So we have right now 5 brands under Mr.Diy. Mr.Diy Premium is for higher quality electrical products. Some of the best sellers, including light bulbs and batteries. We have Mr.Diy brand for reliable everyday household item. We have 3 new brands that we just launched last year and will be one of the key focus in the coming years, which is Days, Hoja, and Adoria. Basically, Days is a brand for our daily essentials like FMCG's product, such as tissue papers, cotton bud, cleaning stuff and essential. Hoja is a brand for our imported snacks. It will be a growing segment in the future. And lastly, Adoria is for affordable jewelry and also accessory. So what's the reason we are coming up with all these new brand? In fact, private labels has been a key segment for us for many years, and it's also one of the our competitive advantage and also unique selling point. Yeah. So in the past, we only have a DIY Premium and Mr.Diy branding, and we have more than 16,000 products, 10 categories, 45% under these 2 branding. So we face some challenges, like for example, if we are putting some jewelry product under the Mr.Diy branding, the consumer feel is slightly too masculine, right? So it's like you are using a hardware brand on your, as a earring or necklaces. People doesn't feel comfortable. So I think that's why we came up with Adoria, basically to switch our jewelry private label into a Adoria brand, and then Days is mainly for the daily essentials. Yeah. So apart from private label, we are also developing of our own IPs. IP is a hot thing for retail the previous 1-2 years. So we have our own IP, namely OOML at the bottom right corner, and also Bananaya. This belongs to Mr.Diy, which this will help to create a stronger customer segment and make our product offering more distinct, more interesting. So together, our private label and also the IP product and also the licensing product will help to strengthen our competitive position and allow us to continue to deliver great value and choices to all our customers in Thailand.
Okay, thank you. I would like to shift the discussion slightly toward the profitability a little bit. What would you say are they the key driver for the gross margin, and how sustainable do you see this driver over the medium term?
Yeah, I think, if you look at our gross margin last year was at 51.7, and then if you compare to 3 years ago, actually there's a raise from 45 to 48 to 49 to 51.7. So there's that shows an increasing trend, and a lot of investors or other stakeholders, they could have expectation that gross margin continue to increase in the coming period. I think let me explain why there's a shift of this gross margin in quite a significant way in the past few years. So as you know, 75% of our products are imported. We import from a few countries, including China, India, Vietnam, Malaysia, and Indonesia, and 25% are locally sourced. So most of the products, I would say, it's come from China. So if you recall, in year 2020 to year 2022, during the COVID-19 period, the country that shuts the longest is China. As a result, in the past, our global procurement team, they visit China frequently to source product. They couldn't do that anymore because the country has locked down during that period. As a result, we could only repeat order with the same product, or basically just getting a new product from the existing supplier we have. When the countries reopened in 2023, our global procurement team finally managed to revisit our supplier. But most importantly, I think the face-to-face interaction is important. But most importantly, we as a group is coming back with a bigger volume. So, in 2019, we have the DIY group as a whole has 1,000 stores globally. By 2023, we went back with 3,000 stores. So we never stopped growing during the pandemic, not only in Thailand, but also other markets. And with that volume that we're able to commit, we managed to negotiate even more competitive prices for the existing product we have. And basically, that reflects in our gross profit margin. And we practice a cost-based pricing, right? So basically, we are focusing on lowering down our operational costs, lowering down, negotiate hard to bring the product cost affordable. We use a cost-based pricing. We pass the saving to the consumer. So I think that basically, that situation continues in 2023 and 2024. Moving forward, we think the gross profit margin in this year should be at a stabilized stage because, of course, there will be a benefit of economy of scale that we are going to continue to enjoy as today the group is operating in 14 countries, operating 6,000 stores globally. So when our procurement team, they are sourcing, they are not just sourcing with the volume of 1,100 we have in Thailand, but is with the volume of 6,000 stores we have globally. And this number is adding, annually, and we expect this to double in 5 years' time. So, of course, that we are able to continue to bring the product cost down, but we do expect the gross profit margin will be at a similar level for 2026, same as year 2025. Because apart from expanding the margin, we also wanted to maintain our price competitive. Today, based on the research, our price is 27% cheaper than the peers, and I think this is important, especially at soft economic situation. Affordability is good for the general people.
Okay, thank you. It sounds so strong for the gross margin going forward. Final question for me now is, how do you see the consumer demand environment in Thailand over the next 6 to 12 months?
Yeah, sure. Over the next few months, we expect the consumer environment in Thailand continue to be cautious. For us, our basket size will remain stable at 160 baht, with an average 4 items per basket. That makes our price per item at 40 baht. And at the same time, we continue to see healthy transaction growth with around 120 million transaction in FY25, which is a 23% growth year on year. I think why this is important for Mr.Diy and why this is then relevant to the consumer sentiment. Basically, with 165 basket size, average we have 4 items per basket. That makes our price per item 40 baht, which is extremely affordable. And even at difficult times, the local consumer wouldn't have too much pressure on spending, because retail is like a therapy. People love to shop. There's a needs. Not only you're buying not only because you need it, but there's also a fun and a discovery process behind that. Yeah. So with the affordable prices that we are offering, basically the general public can still enjoy shopping without burdening their wallet. Yeah. So what we see that works for us will then be, how do we attract more traffic to Mr.Diy store? So basically the growth wouldn't be too much coming from basket size expansion, but it will be more on transaction expansion, as last year our transaction has added by 23% year on year. So going forward, our focus is to further drive growth through two things: effective merchandising. Number one, we will constantly refresh our assortment. We'll bring in 500 new products every month to delight our customers. And then, we use our data analytics and also our internal product grading system to determine the performance of our product, and only the best product will stay in our shop for the Thai consumer. Number two, we will continue to run high impact marketing to build brand awareness and also to boost our revenue. In Mr.Diy, our annual campaign, they are all strategically planned to run promotional campaign at the right time to maximize the seasonal demand. So typically our strongest month will be in May, July, and also December. We will also continue to invest in above the line advertising to build brand equity and also to build top of mind awareness. And for everyone's information, Mr.Diy has the highest top of mind compared to others retail peers in Thailand. And why top of mind is important? Because all these things that we are doing, all the marketing effort that we are doing, we're able to keep our top of mind strong. And with a strong top of mind, it will then able to attract traffic to our store and increase transaction. And therefore merchandising and marketing will continue to be the future key driver of our growth in Thailand.
Okay, so let's move to the situation of Middle East tension and lead to the oil price talk. How are your operating costs being affected, and how you gonna manage it, Andy?
Yeah, on oil prices, I think there are two things that is short term. There are two things that is happening right now, which is increase in oil prices and also whether the companies is seeing any shortages of oil. So operationally, we are well prepared. For Mr.Diy, we have over 130 lorries in-house delivering goods to our stores nationwide. And around 80% of our deliveries are managed in-house. And this means we are not heavily dependent on any third party. And so far, we are not seeing any disruption in our domestic logistics. Our cost exposure is also limited. So the fuel costs accounted for only 0.3% to our sales. So the impact remain manageable. Yeah. So again, I repeat, it accounted for only 0.3% to our sales. Yeah. And lastly, our inventories are in strong position. About 75% of our products are imported. We import from 5 countries, including China, India, Vietnam, Malaysia, and Indonesia. As imported products typically require longer lead time. So our business model at the very beginning is designed to maintain a higher level of inventory in our store and warehouses all the time. And we currently hold over 6 months of inventory in Thailand, which we think it will be sufficient for the short and mid-term. And, basically, in conclusion, we do not expect any major disruption near term. However, if the situation prolong, it may affect the whole industry, not just Mr.Diy. But for now, we are well prepared.
Okay, so last but not least, what are the key developments in 2026 that investors should mainly focus on?
Okay, yeah. Our main priority for 2026 is to continue expanding our store network. We plan to add 210 new stores this year. Our business development team at this stage has already secured 80% of the location required to open this year. So basically, they are started to look at the store that need to open in November and December already. The rest are being fully settled. And this year is also very special for Mr.Diy because, we are celebrating our 10 years anniversary, our 10 years anniversary milestone. And to celebrate this, we will be rolling out the new Mr.Diy 2.0 concept across the market. And this marks the next stage of our retail evolution. So what we are going to upgrade. So first, we are basically refreshing our store design and also the brand identity. If you look at the picture, the bigger picture there, it shows our new 2.0 concept versus the two concepts we have in the past 10 years. So our brighter yellow facade will make our store more visible and also more welcoming, while giving the stores a modern look in the communities we serve. This is extremely important when we, open in upcountry where this color setting will make us stand out compared to others, modern retail peers. And second, we are also improving our in-store experience, with wider see-through windows and also better lighting to create a more open and comfortable shopping experience. And this will help our customers to shop more easily and, able to discover more products, and hopefully, they would spend more time in our store. And thirdly, we are implementing we call it a format optimized merchandising, where product assortment, they are all tailored by store format and also geography, making our store more relevant to the local customer we serve in each area. So overall, the Mr.Diy 2.0 format is not just an aesthetic update. It reflects what we have learned over the 10 years operating in Thailand, and the outcome and basically this store concept will help us to strengthen our position as we continue to grow for the next few decades in Thailand.
Okay. So thanks for the insightful information. So on behalf of KSecurities, we really appreciate and truly to have the pleasure of welcoming you back. Have a good day, Andy.
Thank you. Thanks for having me.
Thank you very much.
โอเคครับสั้นๆครับพี่ทิพย์ส่งท้ายเป็นยังไงบ้าง ดูฟังแล้วผมเซอร์ไพรส์นะว่า inventory เขาดูเยอะกว่าบริษัทค้าปลีกแล้วดูเขามี manageable มีดู manage cost ได้ค่อนข้างดีนะฟังแล้วดูเซอร์ไพรส์นะพี่ทิพย์
ค่ะก็อย่างที่คุณแอนดี้แชร์ไปเลยนะคะก็คือว่าด้วยความที่สัดส่วนสินค้าของเขาส่วนใหญ่อะมันเป็นสินค้าที่นำเข้ามาจากต่างประเทศค่อนข้างเยอะเนาะแล้วก็โดยอาศัย networking ของMr.Diy ใน regional เนี่ยในการที่จะเจรจาหรือว่าต่อรองเนี่ยในแง่ของราคาแล้วก็โวลุ่มเนี่ยมันก็เลยทำให้ภาพของinventory ที่เขามีเนี่ยมันสามารถที่จะรองรับสถานการณ์ณปัจจุบันที่อาจจะมีประเด็นในสินค้าบางรายการที่อาจจะมีโอกาสที่จะ shortage ไปได้ซึ่งตรงเนี้ยเราก็คิดว่าด้วยสัดส่วน inventory ของเขาที่มีอยู่ค่อนข้างจะพอสมควรเนี่ยทำให้น่าจะสามารถมีavailability นะคะไปจนถึงช่วงประมาณต้นไตรมาส 4อันเนี้ยได้เลยแล้วก็ถ้าเราคุยกันเรื่องว่าแล้ว inventory สูงเนี่ยมันจะมีความน่ากังวลหรือเปล่า Profitability เป็นอย่างไรนะคะก็คืออย่างที่เรามีการถามไปแล้วแหละว่าเรื่องของ gross margin เนี่ยก็ ไม่ได้ดูน่ากังวลเพราะว่าสิ่งที่เขาทำมาเนี่ยมันน่าจะทำให้ภาพของ profitability ในปีอย่างน้อยในปีนี้เนี่ยน่าจะ
ใช่ ยังดีอยู่
ได้อยู่ในระดับที่ค่อนข้างสูงใกล้เคียง
อืม
กับปีที่แล้วนะคะซึ่งก็ถือว่าเป็นตัวเลขที่ดีมากๆนะคะก็ในสถานการณ์นี้เนี่ยด้วยเอ่อtransportation system ของเขานะคะมี fleet ของตัวเองนะคะเพราะฉะนั้นเนี่ยสิ่งที่อาจจะมีต้นทุนที่สูงขึ้นบ้างก็คือเรื่องของราคาน้ำมันแต่ว่าคงไม่ได้เกิด disrupt ในแง่ของการขนส่งมากนักก็ดูว่า operation เนี่ยน่าจะค่อนข้าง smooth in relative โดยภาพรวมนะคะก็ดูน่าจะค่อนข้างมี fundamental ที่ดีในแง่ของการที่จะรับรอง